In this video, I wanted to talk to you a little bit about my recent trade in Apple. You're looking at a stock chart of Apple, it's a daily chart, and you're looking at this from, I think this was back sometime last week, last Thursday, which was the 8th of September when I looked at this chart. But I wanted to see if there were any opportunities given that the iPhone 7 was about to be released. And you've seen in my previous videos that Apple is one of my favorite stocks anyway. And what I could see here is a very nice upward trend from around May of this year. So we're looking at 2016. And I want to go through the process of how I analyze a particular chart to identify an opportunity. And then I want to walk you through how I analyze a number of options to come up with a trade that I felt was in line with my own risk to reward profile, and that was in line with my own prognosis based on my chart analysis that I'm going to walk you through now. Now, the first thing I like to do when I'm looking at a particular chart is I like to just draw a couple of lines where I feel there's some support or resistance. Now, if you don't know what I mean by support or resistance, you can look at some of my earlier videos or just look it up on Google. What does it mean when we refer to support or resistance? But very quickly, I'll just explain that support is somewhere where the stock has bounced up from. So you can see here at the price of around $90, Apple came down fairly hard in early April this year, a great buying opportunity, and that acted as support where it bounced up from. And you can see it sort of tried to retest that support back here in June. It didn't reach the $90 level and then continued to rise from that level. So it's pretty clear for me on this chart that 90 is a fairly strong level of support. So I like to draw these lines, and then I also like to draw lines where I believe there's a bit of resistance. Now, resistance is when the stock sort of finds what we refer to as a ceiling, and it just sort of comes back down. You can see here when Apple found a bit of support here in middle of May at $90, it started to bounce up higher, but then it hit a ceiling at $100, which is fairly common in $10 increments. And $100 is a very common, strong psychological resistance level where many stocks, when they're approaching that level, seem to find what we call resistance, like a top, a little bit of a ceiling. You can see clearly that Apple found that level of resistance here in sort of late May, early June, where it found a top and then it started to move back down towards the support level, but didn't reach the $90 level and was able to hold that level of support. You can see then it continued up towards that level of resistance again and found a bit of weakness and started to come back down again. So we can clearly also say that this level here is a level of resistance for Apple as well. And as I said before, this level 100 is many times a very common psychological level of resistance anyway. Now, something that I can see in the chart that I'll also mention while I'm here is that old support is very commonly future resistance. So back here we can see here in March, Apple found a bit of support at $100. Now what I might actually do is on my platform, I'll see if I can add another indicator here just to help me draw this a bit more clearly for you. So this level here, now I might just change the color of that. I don't like that. Okay, what I'll try and do is let's make the border and let's just make this yellow. A bit easier to see, I think, so that we're not hiding any of the bars. Okay. Now here you can see this was support for Apple back in March of 2016. Now that's a great confirmation pattern. That's a great pattern that I can see in this chart where when a stock tries to break a psychological support level of resistance like $100, you want it to come back and retest that level and then wait for it to break back up. So if I draw a couple of arrows here, let me get a couple of arrows in here because this is a great piece of additional education for you that I've noticed on this chart. So here we can see the stock moved up through its resistance level And how do you know if it's not going to come back down? Like, where do you know it's actually cleared resistance? Well, the perfect way to identify that is when it comes back and retests that level and then starts to break up again, as it's done in this case. Okay, so let's just draw that again. So you can see it's come back and retested this level of 100 and started to move back up. So that's a great pattern you want to look out for in future technical chart analysis. Okay, now as I was saying, previous support, which in this case is in March, very commonly becomes future resistance. So you can see this old support became future resistance here in late May, early June. And I forgot to save my circle appearance as the default, so we'll do that this time. So I'll just, now there's lots of different chart pattern programs out there, so I don't go into a lot of detail on what platforms I use because there's so many out there and there's so much variance in price. So have a look in the market, what's out there for stock chart programs. There's many free ones, there's lots of programs online, there's lots of programs that you deploy on your desktop or on your Mac, and pick the one that is most suitable to you. Just make sure it has all the required indicators and tools that you use for when you're going to be analyzing your own opportunities. So you can see this level here was previous support, and it also became a very strong level of resistance. So it also became a bit of resistance here as well in July. So let's continue with drawing some of these horizontal lines at key support and resistance levels. We can also see a couple of support levels here as well at the 105 level. So you can see that this was a key support level, although it didn't really hold, it actually fell through this level. And that's why you can see there's actually quite a big gap there, because this 105 was a previous support level, and as the stock broke through that support level, it actually fell pretty hard. Okay, and you can also see that there's a bit of a support level here as well, where the stocks come back down in towards middle of August, back down to 105, and started to rise again, but now you can see it's testing that support level again. So 105 is also a very key important number, so we'll draw a line there as well. Now if I just continue on, we can see there's a few more levels of resistance as well, and that's generally how I start to analyze my opportunities, by just putting in some horizontal lines and identifying where are the key support and resistance levels. Now everybody's analysis is going to be different, and depending on what time frame you're reviewing, you'll have different lines than what I might have on this particular chart if you're doing your own analysis. Now what I do from this point is I then look at the actual overall trend. So I get, what I try to do is mark out some sort of diagonal line to get an indication of which sort of direction is this stock moving towards. Now we can clearly see that there's a bit of a trend here, that the stock's moving in this upper direction. Now that probably may not be as steep as what I might like it to really be. I don't think Apple's going to move that slow, so what I might do is then look at the most recent couple of moves, which is this here, and decide how steep do I really want the trend to indicate future price movement. To me, that's probably a little bit more realistic, because Apple is a fairly fast moving stock, so I would expect a fairly fast move in the stock in the current trend, which is towards the upside. Now obviously nothing's guaranteed, nobody knows what Apple's going to do next. It could completely fall apart at this 105 level and continue to test its previous support level at 100, and even continue to test back 95 and 90. So you always need to understand what the risks are and put a line in the sand. Now if I look at this, I like to then give myself a bit of time as well. So I'll just take this away, because while that is probably what a lot of traders do, I actually don't project my future price points using this type of trend line. So I'm going to remove that line. What I like to do is I like to think about, well, how much time do I want to give myself to be right in my thinking? So right now I'm thinking that the stock's going to continue rising and most likely retest some of these upper resistance lines. If we go back, we can see the previous highs were up around this sort of 120, 125 area. So I could even draw a couple of resistance lines up around these levels and try and see if there's any opportunity for the stock to retest some of those lines as it's now moving back up towards its highs. So for my particular prognosis, I want to give myself probably to the end of this year, which would mean that I'm looking at somewhere around about the middle of December. Now, options is what I'm going to be using for this particular trading opportunity, and options expire on the third Friday of every month. So if I look at the calendar here and I look at December, well, the third Friday is the 16th of December. So that's basically going to be my timeline. That's going to be my maximum time that I want to be in the trade, and I probably want to be out before I hit that expiry timeline. So when I'm looking at the options, I may decide to go with November options, for example. Now, what I like to do then is basically project where I think the stock's going using the current trend. So if we look at the current trend now and try and project up to the current timeline, we might draw a couple of different lines just until we get a bit of comfort in what we're thinking. So I might start with drawing a line somewhere around this sort of, depending on how steep I feel the trend's going to continue. You want to try and connect at least two recent moves. So what I might actually do is just move this in a bit, just so that it's in alignment with the way that the stock has moved. So now I do feel that's probably a bit too steep. Okay, that's suggesting, I'll actually just extend that out as well to the right. Now that's actually suggesting that by this timeline we're going to be around this 120 level. Now that's not a bad projection. I think that's fairly realistic. It obviously depends what the rest of the market's going to do as well. I'll talk about that in a moment as well. But then I also like to draw a couple of other possibilities. So if we join these two lines, okay, so this one down the bottom, let me just make sure you understand where I'm projecting these from. So this low and this low to make this new trend line that's not as steep as the previous trend line. Let's just extend this one. Okay, so this one's projecting that it's actually going to continue lower. And then you might look at this and say, well, what about if I sort of go, so this first trajectory is quite aggressive. Okay, we're saying it's going to hit somewhere around 120 by the end of the year. This one here is probably too conservative because it's actually projecting a move a bit lower than where the stock is today. Now, it's obviously possible, but I don't believe that's going to be the future projection of Apple stock. So another way I like to look at this is, well, what about if I just take sort of a mid-view and project in the middle of these two projections to try and get some sense of where I believe that we might be towards the end of the year. Now, we're saying somewhere around about 110 to 1. If you look at this particular line, it's sort of coming here around about this 110 area. Now, the reason I say 110 is because I think if we look at this, which is where that December expiry timeline intersects with that projected trend, it's around about 108. But I think once you get to around about the 108, 109, the stock will most likely tend to move up to the next most likely level of resistance, which would be that 110. Okay, so I think if we split the difference between what we're thinking here and this top more aggressive target of 120, I think 115 is a very reasonable target for the December timeline for the end of the year. If we continue to see strong continuation in the trend that the stock's moving at the moment. So that's how I like to start to look at my charts, and the reason I don't use a much more scientific approach is because you don't really know which way, where the stock's going to be. It's a forecast, it's a projection. No one knows what's going to happen tomorrow. The stock will fall apart at this point in time. The sales of iPhone 7 may not be as strong as is expected, or they could be a lot stronger than expected. Or imagine if something like what happened to Samsung happens to the Apple phone, where the battery is faulty and it blows up, or there's other problems, and that could completely crash the particular stock. So you just don't know what's going to happen, and you plan your trades, you have a look at the opportunity, and you need to identify your risk. So in my particular trading, I also like to identify a point on the chart where I will say, look, if the stock goes below this level, well, I'm going to close my trade. And a good point to look at that is previous levels of support. So in my view, the stock today, when I was looking at this chart, which is the 8th of September, was trading at around $105, which is right on its support level. Now, I don't want to really see the stock go below the previous pivot point, which is around here, okay, which occurred back in July. If I look at the low of that, it's around about 102. Okay, so if we see the stock go below 102, then I'd probably want to exit that trade and take my losses. Okay, so I'll mark that in red, so we know that this is the point on the chart where we will look to exit the position or make some other adjustment if Apple stock starts to trade back below this level. Now, a key point about this particular level is that it's very close to the support of $100. Okay, so it's very likely that you might get a move back down to this 100 level. Let me mark that with an arrow to retest this support level before the stock bounces up back towards our target. Now that's going to be a very common, if that does happen, that's very common. Or you may just get a more aggressive move to the upside from a bounce from this current pivot, because of essentially retesting this level of 105, which was a previous support level from back in August. So only time will tell. Okay, so from this point, I've got a prognosis, I've got a timeline in mind. I can see that I want to trade up around to the end of the year. I want to use either December options expiry or November options expiry. I have a target in mind, which is somewhere above 110 to 115. So we said 115 is our target. And we're using stock options. So the next thing that I usually do in my analysis is I now start to look at the different options that are available in the options chain. Now, if you don't have a particular platform that you're using to look at options, again, there's lots of different platforms, there's lots of programs that you can deploy on your desktop, there's lots of online websites that provide information on options for individual stocks. For example, you could look at finance.yahoo.com. There's an options chain available. I think Google is also providing financial information online as well for free. So there's lots of different ways you can look up this information. But I'm looking at Apple December options. You can see that the symbol is Apple, and I'm looking at December 2016. So I've got 98 days for this trade to work out. Now, the first thing that I like to do is the stock's trading at, as we said, if we go back to the stock chart, it's trading at around $105. So the first type of option that I like to review, I obviously want to buy call options because I'm expecting the stock to continue higher. That's what my prognosis says, or my analysis. I will usually scroll down, and the first thing I like to do is find on this where is the current stock trading. So on my platform it says it right here, 105, and I want to then go a little bit in the money. So that's the first type of option that I will review and analyze. So I can see here the 95 call is roughly trading at around $1,400. So I will go ahead and start to analyze that particular option. And what I want to do is I want to see a couple of things. Let me just bring up the chart. I want to see a couple of things. Number one, where's my break-even point at expiry? And my platform shows me that. And number two, I want to work out at what point will I double my money, make a return of 100% based on the movement of the stock. So and my platform actually does that for me as well. So here I can see, now this is what's called the risk graph. That's how I analyze the risk. I like to visualize my positions. And I'm not going to talk much about risk graphs because it's a fairly complex topic and lots of things that you need to be aware of. But it's just a way to visualize how much profit or loss you're going to make based on different price points in the stock. So here you can see on the horizontal axis, the stock price is shown, and on the vertical axis, the profit is shown. You can see as the stock price moves up, so if we're going from left to right, 75, 100, 125, 150, the profit is increasing, which is shown here on the left-hand side on the vertical axis, okay? So the first thing I like to see is at what point is my break even. And here on this platform, using this particular option, which is the December 95 call at a cost of $1,445 for one single contract, the stock needs to move up to 109.45 to break even at options expiry. Okay, so that's very important. Stock right now is around $105. So it's got to move up by at least $4 at options expiry for me to just break even, okay? Now, my platform also shows me at what point, now this is what I like to see, does the stock have to move up? How much movement in the stock do I need to see before I can actually make a return of 100%? And that's usually my first target. I want to double my money. Okay, you can see here that the stock needs to move up by at least 17.4%, okay, for this particular option to double. Now, the reason you can see a couple of these is because the platform shows you this in different timelines, okay? So I won't talk too much about why I'm using this particular timeline, but basically what I'm trying to say here is that right now I'm using December options, and that gives me a total of 99 days to be in the trade. I don't want to be in the trade all the way up to options expiry. I will usually exit the trade when there's roughly 30 days left to options expiry, because in that last 30 days, depending on the position, options are going to decay fairly rapidly. So that's why I'm looking at this particular row here in the table, because it says here that this is when you have 33 days left for this option to expire, which is going to occur in the middle of November. Okay, now for this option to double in value, meaning on a return a 100% return on investment, the stock has to move up by 17.4% up to and over 120. Okay, so it's at a price of 123.85. Now that doesn't mean that we won't make any profit as the stock rises. We can clearly see that as the stock's approaching that 123, our profit's actually increasing. So what I might do is zoom into this chart a bit so you can see this a bit more clearly. And then I'm going to start to talk about how I start and then break this down and analyze this further. So I'm just going to zoom into the actual chart. And just waiting for that to load up. Okay, so you can see that at 105, which is where this blue line, and this is represented by this blue line, which is the current price of the stock. As the price of the stock moves higher, our profit is increasing. So for example, if the stock is at say 115, depending on how much time has gone by, we're going to make 300. If I move this up a bit more, where's 115? 115 is about here. Okay, we're going to make about $630 on an investment of around $1,440. Okay, now remember our target is 115. So this particular option doesn't really meet my criteria, because I want to make at least a 100% return on investment by the time I get to my target. I want to double my money at least. Okay, so that tells me that the in the money option in this particular case is not suitable, although it does have a nice amount here where the stock doesn't have to move up much for me to break even on my trade. Okay, it only has to move up to 109.45 from its current price of 105.52, which is not a very big move for a stock like Apple that may move $10-15 even higher in a particular trading day. Okay, so let's now look at a different particular option. What I then like to do is look at an at the money option, which is an option that's more closer to where the current price of the stock is. You can see that's this 105 call option, which is trading around about $500. So let me review that. Bring up the chart for that particular option. And I will do this and maybe look at 4 or 5 different risk graphs before I make a decision on what opportunity, how I want to construct my particular trade. So we can see that this particular option, the stock has to move a little bit higher than the previous one to break even. That option's expiry. Let's look at when does this particular option double. Okay, so we're spending less, so you can see it's actually having to move less for us to double. Now, I like positions that double my money with less than 10% movement in stock price. So this particular option doubles with a small 8.7% move in the underlying stock. Okay, you can see 114.74 is the required stock price for Apple for this particular call option to double. And that's good because that is below our target of 115. If I go back to the stock chart, our target is 115. Okay, and it's within our timeline because we're using December options. Okay, so I don't mind this particular option for this particular trade, although we do need to be a little bit wary that the stock needs to move up a little bit more than the previous position, up to 110 at options expiry, just to break even. Okay, so I then also look at, well, what about if I go slightly out of the money? Okay, so we've looked at a deep in the money option. Okay, I think it was a 95 call. And remembering that Apple right now is at 105, we looked at the at the money option, which is a 105 call. Remembering that Apple at the moment is at 105, so an option that's mimicking pretty close to where the stock price is. Now what I want to do is look at an option that's a little bit out of the money, so a call option that is going to be higher than where the stock price is right now. And we can see that here's the current price of the stock, 105, and this 115 is a little bit interesting. It's out of the money, okay, because this call option is at a strike price which is higher than where the current price of Apple is. Apple right now is 105.52 and the call option I'm looking at is 115. Now these two columns on the right hand side are basically the volume and the open interest. Now these are highlighted on my platform because this particular option has the highest volume and the highest open interest. So that's an interesting one, and it's out of the money, and it only costs $150. So I'm going to look at that and look at the risk graph and look at when does that particular, how much does the stock need to move for that particular option to double in value, meaning return a yield of 100%. Now, straight away I can see that the stock needs to move much higher for it to break even, which is very common for out of the money options. So in this case, we have to move above our target of 115 at options expiry just to break even. Now that's at options expiry, okay? If the stock moves to our target sooner, then we're still going to make a profit. So let me zoom into the chart a bit. Well, before I zoom in, let's have a look at when does this double. So you can see this one takes a little bit longer to double. The previous one I think was 8.4%, a move of up to 114. This one is a move up above 115, which is a move of around 9%. Still pretty good in my view for the criteria that I have for my own trading, which is that I want to expect a 100% return in investment with a move in the stock of less than 10%. In this case, it's 9%. But if you can find a position that moves, doubles your money sooner, well, then that's a better position in my view. But you've got to take into consideration some of these other things. Okay, like, for example, if you need to hold the position up until option's expiry, well, you probably wouldn't if it's a call option. You want to get out 30 days before. We can clearly see that the stock needs to move a lot more to make sure that you don't incur a loss, for example, to hit your break-even point. Let's zoom into this chart and look at this chart a bit more carefully as well, just so that we can learn a little bit more. So I'm going to zoom in to the key price points that we're looking at, which is in line with our prognosis. Okay. Just waiting for that to light up. So there you go. So we can see, as I said before, stock price on the horizontal axis and your profit is on the vertical axis. So you can see that as the stock price is rising and as time's going on, your profit is also rising. Okay. Now your double. So for us to make a profit of $300, the price needs to be around that 115. Okay. So I don't mind this one either. My only issue with this is that this break-even point is a lot higher than what I like. It's above the target price. And we've already seen positions that double with a much lower move in the stock. Okay, like the one that we saw previously. Now, I should mention that when you are comparing these, you need to remember that you're going to be investing the same amount of money in each position. So even though this particular option is cheaper because it's out of the money, this one's $150, where the one before was, I didn't even look at the price. I mean, the in the money was the most expensive at $1,400. But you need to increase the number of contracts to make sure you are comparing the same amount of investment. Okay, so just keep that in mind. So the one that I actually looked at was a combination. So let me bring up the one that I looked at. Let me close this one down. I'm just going to basically, I won't talk too much about why I constructed this, but basically I bought an option, I sold some options, and I bought another option. And basically what's important is the risk graph. Okay. And if we look at the risk graph, we can see that as the stock price rises, so let me just make sure we're looking at this. So we've got the stock price in this case on the left hand side. Let me just fix that up so that I'm not confusing you. Okay, I'll just actually, that's probably a better view anyway, so we'll just stick with that view where we have just waiting for that to finish loading. Okay, so I think this is a better view anyway. It's a bit easier to read, where the stock price is rising, which is represented on the left hand side. The profit is represented on the bottom on the horizontal axis, because this particular chart is slightly different. It has an upper limit and a lower limit, and that's because the way that I've constructed this particular trade by buying and selling options at the same time. Now, don't worry too much about how I've constructed it, but look at the graph. Okay, the graph is what tells you the story. You can see that if the stock price gets to around about the target of, let's try and bring this down to closer to 115, I'm making a profit of more than 100%, okay, because we're only spending $150, for example, $149 to get into this position. And at the price point of 115, the profit is $263, which is what this particular graph shows. Remember that horizontal axis represents profit. Okay, so it's much greater than 100% return on investment, very close at our target price of 115. Now, the only issue that I see in this risk graph is, well, what happens if Apple skyrockets? Okay, we see that if the stock continues to go higher, for example, let's say if it goes to 140, well, our profit is actually zero, and in some cases, if it actually, it's actually less. Okay, so it's actually a loss, and that's because of the way that this particular trade has been structured. So the trade that I actually went with, I fixed that problem by buying some more call options. So just by spending another $20, I actually fixed that problem, and that's what you need to learn, how to construct these trades so that you get the right looking risk graph that's in line with your prognosis. So it was 149 previously, okay, and I spent another $20 and I changed my risk graph that is a bit more in line with what a long call risk graph might look like. So you can see now, if the stock price does in fact continue to rise, well, my profit also continues to rise because the profit is towards the right hand side. Now, my prognosis doesn't indicate we're going to see a move to those levels, but why limit yourself in case the stock does make a massive move? You don't want to be in a position where you're actually not taking advantage and profiting with that bonus, as I would say. But you can see that at our targets, which is somewhere around about here, we're still making more than 100% return on investment because we're only spending $168 to get into this trade. And if the stock were to reach our target of somewhere around that 115 level, you can see here, as represented on this chart, the profit's going to be a bit over $200, which is more than what we had put up to enter this trade. So it's in line with my criteria, which is to yield a 100% return on investment with a lower than 10% movement in the underlying stock. Now let's look at how much this stock actually has to move for my position to yield a 100% return on investment. So you can see I've improved this from all of the other positions. This particular position only needs to move up by around 7%, up to $113 from its current price of 105.52 for me to yield a 100% return on investment. Now, the other thing I should also say is in this case, I actually chose the November options expiry, okay. I could also have analysed the Decembers. I may have analysed the Decembers, I can't remember now, and I probably liked this one better because it continues to profit as the stock price is rising, and it was in line with my prognosis, which was that even if the stock moved up to 112 to 113, I was able to still achieve my 100% return on investment. Okay, now if I show you this trade today, so I'm going to go in and look at this trade in the actual trading platform, see how many contracts I purchased, and let's look at the result of that trade. So I actually bought 5 of those positions at $168 each, and I spent a total of $840. Okay, so that's a risk graph down here. Now you can see it mimics almost identical to what the call option was when we just bought a call option, which is the best thing generally when you want to be in a position that benefits as the stock price rises. But I've mimicked that type of risk graph by buying and selling multiple options to construct a risk graph that's in line with my prognosis and gives me the best opportunity to make my 100% return on investment with the least amount of movement in the underlying stock. Okay, so I'm only needing a 7% movement in the underlying stock for me to yield a 100% return on investment. Now we should also look at the break even point on this particular trade is only 111. So again, that's pretty good. Okay. Now if I go to where I exited this particular position, it was, I'll just go to the current date. It was the day before, it was Thursday actually, that I closed this position. Now the reason I closed this position on Thursday was because I saw three strong days up in the movement of the stock, and that was enough for me. I'm not greedy, and usually after 3 strong moves in sequence, you do get a bit of a pullback. So I'm just going to, in fact, this is something I do want to speak about. The next day that I actually placed this trade, the stock went right down to where our stop level was. Okay, so the stock closed at 103 on this particular day. And you can see we had a line already on the chart close to around that 102. So I'm going to actually move the position to the 9th of September, and let's look at what the potential loss might have been on that particular day, which was the next day that I had entered this position, because you will face these types of psychological triggers in your mind. So right now I'm down $220. Now usually I have a technical level on the charts at the stop loss, which we've marked here at 102, and I also have a physical financial stop loss of 50% of my entry as my trigger point to close the trade or make an adjustment. So if this loss was, $420, for example, then I would have looked at closing the position down and taking my loss and looking at the next particular opportunity. Okay. So on the next day, I remember that for the next 3 days, this stock was really strong. Okay. So you can see here that for the next 3 days, the stock moved up nicely with strong volume as well. And this was on the 14th of September. And it was at that point that I decided to close the trade, because generally after 3 strong moves like that, and we're at the previous level of resistance, you get a bit of a pullback. So I'm going to move to where that is on the risk graph for the 14th of September and show you the status of the position at that point in time. Okay. Now, normally I also looked at that and I thought, well, do I want to hold on to this for the rest of the week? And I think this was Wednesday or Thursday. And it's pretty common that when you get a big, strong move like this, and you're at the end of the week, for example, if I waited to Friday, then I would have seen some profit taking by the traders, which would have led to a bit of a pullback anyway. Of course, I could have been wrong. The stock could have continued, to move up, and it could be at 120 right now. But I would rather lock in a strong profit and give up a few gains rather than turn this around into a losing trade and give up some of those profits that I already made. Okay, so at this point in time we were at $705. Is this right? I think what's the stock price at this point in time? So I closed at 111. Are we on the right date? Because I do remember that a profit level was a bit more, so I must have actually held on for a bit longer. So let's continue. Yeah, so the next day. Okay, the next day. So on the 15th, we can see another strong move up, and I think that's when I had closed my position. I could obviously go and look at it in the platform. Yeah, Thursday. I thought it was Thursday. Because I usually hold on to my positions until I do yield a 100% return on investment or make an adjustment and lock in some of those profits. I could have at least closed some of these contracts that were open, so I had 5 in total. I could have closed down 3, for example, to lock in some of those profits, but I decided to keep on to them, and I closed the position at a profit of $1,105, which was a return on investment of 131.5%. Okay, I'm only looking for a return of 100%, but that's just a bonus. Okay, the stock gapped up, and so I was able to take advantage of that particular move. So I actually closed the position at this level, which was 115.5. So we had a nice move. You can see a very aggressive move, probably not expected. If we look at the price today, you can see it's just hovering around that same level. Okay, so it wouldn't have made much difference anyway had I held on to the position or not. So you can see that there's a bit of analysis involved. The steps generally are to review the chart, do your technical analysis, mark support and resistance levels, put in a couple of different projections, and come up with a target. For us, it was 115. You can see we're right on our target. Okay, don't be greedy. If you reach your target, you want to close your positions. Make sure you have a timeline in mind as well. Have a stop loss level, a technical level on the chart where if the stock decides to come down below those levels, you're going to close your position. You can see we came very close to that, and it's very important to have those levels as previous support levels if you're in bullish positions, which are positions that are moving to the upside, and then go through an analysis phase and look at different types of options to come up with a prognosis, and always look at your break evens and have a way to calculate, or use your platform to calculate, when does your position double so that you can make at least a 100% return on investment with the smallest amount of movement in the underlying stock. Okay, so we're using the stock price to make decisions on our actual options position. Okay, so that's very important. We're using the actual stock price, but we're trading actual options on that particular stock. Okay, and in my case, I had bought and sold multiple options to come up with my position, my particular trade, but it's as easy to just buy a call option. The simplest thing would have been to just buy a call option. That's ultimately what we're trying to do, to benefit as the stock price rises. Okay, always know your risk, always manage your risk, only trade with capital you can afford to lose, and always have a stop loss level in place. I hope this has been educational, and I look forward to giving you more information over the next coming weeks.